I like to look at the
Thanks, Brian.
TSA numbers, A, because I'm just bored and a dork, but I want to see, everyone's like, don't fly, it's not safe. 30 days in a row now, we've seen more than 1 million people get on a plane. Most days, 1.5 million to 1.8 million. Yeah, still down 35 to 40% from the peak of last year. But let's be clear, at least domestically, there is I was going to use a different term, a lot of people getting on a plane right now.
That's correct, Brian. What we're seeing globally as well, domestic travel is down about 40%. International is where we're seeing major hits, down about 80%. So it'll be interesting to see what Delta says today regarding what they're seeing on traffic. American came out with a bold statement yesterday saying that they expect international traffic to be 80% back to 2019 levels by the summertime, which we think is quite an aggressive statement.
The problem is, as much as we all may fly from New York to Miami or to Texas, where people are living pretty normal lives, what we're not doing is we're not going to Tokyo. We're not going to Paris. How much of those super profitable international routes? That's going to be the issue. And I'm a little surprised, Sheila, the stocks have more than doubled. I get it. The bankruptcy risk is gone for a lot of these companies, but nobody's talking about international travel booming anytime soon.
Exactly, Brian. So 3 things we're looking for to hear commentary from Ed is, 1, yield curves. Have they been able to maintain it? Delta's been the only one that's been able to maintain it. They've been seen as the premium carrier as they've kept that middle seat unblocked. And you said that that's going away starting May 1st. Second is, what are they seeing on international bookings, given American's aggressive comments? We're not seeing it, but keep in mind, American is 45% exposed to Latin America, or 25% of their total sales. Delta's a lot lower than that in terms of their Latin American and Caribbean exposure, which is where most Americans are traveling for leisure. So those are 2 data points we're looking from to hear what Delta's seeing. Pricing and international.
Okay, pricing and international. And so pricing. Let's talk about that, Sheila, because one of my predictions, I make them kind of for fun, but they're sort of semi-serious. I made it last year, was that, and this was December, I don't know, 28th or whatever. If you're going to travel this year, as a lot of people are, book early. And we're already seeing it. We did that a couple weeks ago, how airfares are soaring. I'm looking around the Christmas holidays. Got some sticker shock. Is it going to be a case where there's fewer planes in the sky because they're nervous to put a lot of planes back on, but for those seats to hot destinations, they're going to have a lot of pricing power? How does that balance out?
Well, we're going to see how that plays out. Not necessarily the case. We cover Boeing as well. 30% of the global fleet is still parked. That number is typically under 10%, closer to 5%. So therefore, if the market does come back, do these airlines act irrationally and throw capacity at the market? So American, for example, is flying wide bodies, large 777s down to Puerto Rico, down to Miami. So are they just going to flood these markets, and therefore pricing is going to crash? And so Delta has been a very rational carrier from that regard.
Yeah.
They also have a good corporate exposure in terms of where they're based in the U.S. And their market share in strong hubs like Atlanta. So that'll be another data point we're looking to as well, to see what they're seeing out of corporate American trends, especially given their southern exposure.
Can't let you go. Very quickly, Sheila, is there any airline stock you love right now?
We love. That's easy. We like love for a few reasons. One, its domestic exposure is about 95%. Second, the airline's exposure to corporate is in the right areas. They're not on the coast, where we think United might see some trouble and a lag in the market coming back. And third, their CapEx is cleaned up. And once, they have a $5 billion CapEx number out there. And once they get through that, it's a cash return to shareholders.
Shepard Smith here. Thanks for watching CNBC on YouTube.